So today I wanted to talk about investing, and we talk about wealth building. And I accumulated a lot of my wealth through real estate. I love real estate, but right now for me personally, I think real estate is overinflated and it keeps going up and it keeps going up, and I wish I'd have bought some when the rates were low and locked in. And but I still think it's going to fall. I think it's got a lot of room to fall, judging from where my rents are, and I'm below market. I know that, but even in the max and what the price of a home is right now. So unless they drastically lower rates to make it more affordable, I still think if you don't own a home, buying real estate is great because rents are going to go up. Rents are not going to stay the same. Prices are not going to stay the same. Even if they pull back eventually, they will go up. It's a limited resource. There's not so much of it. More and more people don't buy it out in the middle of nowhere. You might not live that long to see enough people want to move out there, but in the path of growth, I think it's a great option. But my rant today is again on the media. Imagine that. In media, I hear beating this stock down and beating that down. And did you see this? And did you see how much money it lost? And it's just temporary. So if you're out there looking to accumulate wealth, you need to find ways to invest in something. Be it whiskey, be it oil, be it whatever. Some of those to me are riskier. I'm not a financial advisor. But I do believe that, well, like my biggest company probably is Tesla. I love my Tesla. I drive a Tesla. I think where Tesla's going in the future is tenfold. Their robotics, their self-driving. I mean, the semi is like really cool. I want a semi really bad, but it's the only truck I've seen actually kind of go the distance in the towing capacity. So the thing is even if you overbuy, which I kind of got caught up last summer buying in a peak market because it was looking like it was going up and up and up, and I just sort of hearing that dollar cost average, I wish I wouldn't have put so much into it, but then it fell. And they're talking about the end of EVs, and EVs are dying, and yet you look at Tesla sales are still going up. And how could they not be worth more in the future? And yeah, a lot of other EV makers are going down because they make crappy EVs. And I'm not one to say that Tesla, or electric vehicles rather, is the end all to end all. I have two big dually trucks. I've had semis, I've had buses. I still may have those in the future. Right now, my dually trucks and my living quarters trailer is perfect for me. I got stuff to run around. But for a runaround car, the Tesla's awesome. With solar on the roof, it's awesome. We bought an older Tesla because it had free supercharging. I can't tell you how many hundreds of dollars a month, and the prices have dropped drastically on the used cars. Yet when I figure in the price we've saved on fuel, we're still ahead of the game. And so the best thing I can do and tell you is to invest. Invest a little bit, a little bit, a little bit, a little bit. It pays off hugely. One of my favorite stocks is Visa. Visa is so overrated, and every time I go to buy Visa, I'm like, Jesus, I'm overpaying. But Visa, if you look at the stock chart, it's like a straight line. And if you overpay, it's okay in a few months. Again, not advice. It'll probably be right back. But spread your wealth out. There's a lot of different funds out there. We have various different funds in our portfolio. Some are dividend funds because I believe in at least generating some money while it's going. But there's an argument for great companies like NVIDIA. We have some NVIDIA. NVIDIA is just on a tear right now. They don't pay much of a dividend. They reinvest it in the company. And again, I'm investing in that company because they're doing better than my company is. They're growing by leaps and bounds. So, people say there's a FOMO, fear of missing out. And I heard a guy say the other day, JOMO, the joy of missing out. Miss out on what's now. Put a little bit, for me, I saved, there was a book, I can't remember what it was, if that was the name of the book, but they called it the latte factor. And this gal, if she put away just the money she spent on Starbucks and drinking her own coffee, not cutting coffee out, just dropping Starbucks, the money she would make in just a handful of years, I think it was like 10, 12 years, she would have, just in her Starbucks money, over $1 million if she just invested that at a good rate of return. And so, yeah, so if you can do something, find something that you have passion. I like the Tesla. I see where they're going. It's a vision. I'm okay when it's down. It's down right now. Well, it was down. Now it's popping back up, and where I have most of my shares are below where it's at now. So, for me, it's easy. It's when I don't work, to see that money rolling in that I've made without having to work brings a sense of accomplishment, because, man, sometimes I do what I love, and so charging my friends is hard, but it's hard work. I do it because I enjoy it, and I've been blessed to put enough money away to where I don't have to rely on that so much. Love what I do. Had a great day yesterday. Was working till long past dark outside, but what a great day it was. But it was nice to see some stock money rolling in. And again, it's the different companies. One company might be a little heartbreaking when it's down, like Tesla was the other day, but now it's crawling back up. Might fall down. For me, that's great because I want more shares. I kind of have at least a budget of shares to where I want to get to, that I figure one day that I can retire and cash those out, and I have a number that I will cash out on, or if we need it. But I encourage you, I think we talked about bringing down debt. If you don't have money to invest, bring down that debt, because some credit card interest is over 25%. That's a killer rate of return. People say I can't make 20% in things. It's not that hard with decent companies. Maybe year over year. We haven't been doing it that long, but for sure in the real estate, that was easy. But to bring down that debt could save you 25% or more. So if you bring down that debt, that's the same as investing, because now it's not going out, it's coming in, and you can kind of become, basically, it becomes like a snowball, and it starts slow, like the real estate. I mean, I cut back food, I would cut back vacations, I cut back a lot of stuff. I cut back time with friends and going to events, because I wanted to one day not have to work so hard. I was also afraid, because my line of work, training horses, broken bones, concussions, one day if something happened, I wouldn't be able to do that. I wanted something to fall back on. And I one time went blind, and although I couldn't do real estate, it made me think deeper into, if I got hurt, what was something I could do, say in a wheelchair or something, and buying real estate and rental properties was something easy to achieve. So anyways, I hope this enjoys. Look forward to your comments. Let me know what you guys think. What do you guys invest in? What's keeping you back? What's holding you back, for those of you that aren't? That's kind of always a cool one to hear. I know, like I said, real estate for us, I've been storing some money away. We got a pile of cash waiting to leap for an opportunity. I haven't seen my opportunity. I saw one this morning, maybe visit with my wife on, but yeah, what's holding you back? Anyways, good luck out there. Don't listen to the media. That's the best I can say. Happy trails.